While the focus of the world's attention is on the global climate summit in Glasgow, latest figures show that oil companies are still enjoying bumper returns. BP says that underlying profits rose to $3.3 billion in the third quarter, ahead of analysts' expectations. Well, that compares with just $86 million a year ago, when energy demand and prices collapsed during the pandemic. Well, let's talk now to Nick Coleman, who is senior editor at Oil News. Thanks very much indeed for being with us on the programme today. So perhaps not really that surprising that BP's profits are up, given high gas and oil prices. But are these results as strong as the headline suggests?
So you're right. Clearly, the oil price is up 70% from the same time a year ago. So all of these companies are benefiting. It is a generally positive picture for BP. They are now starting to recover from the pandemic. You're going to see probably production increasing, but it was a slightly mixed picture. They had a bit of a hangover, if you like, from Hurricane Ida in the United States, which did deplete their production. There's a lot of maintenance going on at oil fields, certainly in the last sort of 3 months or so, which depleted their production again. I think perhaps some investors didn't really like the hit that they took in terms of their reported earnings as a result of some hedging of LNG prices.
Well, let's talk about COP26. Everybody is, of course. Is BP behind, though, when it comes to transitioning to renewable energies? It's what's on everybody's minds, but BP, of course, heavily focused on fossil fuels.
It is, but BP has endeared itself to some extent with environmentalists, believe it or not, by saying that it expects to reduce its oil and gas production by 40% by 2030 as it replaces, if you like, that energy production with new low-carbon energy forms such as renewables. So in some ways, it is actually pleasing the environmentalists by saying explicitly that we will deliver reductions in our oil and gas output.
BP is also saying, though, that global oil demand is back above 100 million barrels a day. This can't be good for the long-term outlook for fossil fuel demand.
Yeah, absolutely. It's really not compatible with the kind of climate pledges and the climate targets which are being discussed in Glasgow this week. Of course, you could say that some of this is a little bit bumpy. These statistics we're getting at the moment, economic statistics, are quite kind of erratic and volatile because of the kind of bounce back we're seeing after the pandemic. So, whether this level of demand will be sustained in the longer term is a little bit uncertain. There is a lot of volatility around, but it's definitely not compatible with the lower carbon targets which everybody's talking about in Glasgow.
So with these increased profits we're seeing, what's the incentive for BP to move away from fossil fuels towards renewables?
So I guess there's two answers. Firstly is investor pressure. I mean, BP has a shareholder base, quite strongly in the United Kingdom and comes under a lot of pressure from investors, people like pension funds who want to see, a switch to lower carbon energy, and frankly also from the British government. Obviously, BP is a listed company, it's not owned by the British government, but there is a kind of moral pressure there, which is perhaps a bit unique to BP. So those are two answers. I think actually BP would also say it makes good business to be diversifying so that you're not solely dependent on oil. After all, oil is a very volatile commodity. And if possible, you want to diversify your risk. They are forecasting big increases in gas demand around the world, including demand for liquefied natural gas sold to places like China or India, as those countries switch away from coal. And BP would argue that there's a very good justification, in a way, for increasing the gas supply to those countries in order to, if you like, wean them off coal.
Nick Coleman from Oil News, thanks very much indeed for talking to us today.
Not at all.